And welcome out to our halftime report here on a Tuesday, 1/29/2019. We got Apple earnings. We got all kinds of things going on. First thing is my eye catches me over here on YouTube, trying to always figure out how this technology stuff works, Matt. And it says market recap. Is that what it says on your YouTube side?
No, I got talking to halftime report January 29th, 2019.
C'est la vie. I swear this tech stuff is driving me nuts
I
lately.
think we just got to get to the point where we accept the fact that we're never going to be better than technology.
It wins.
It wins all the time.
Yes.
It just does. And you know what? I think it frustrates absolutely everybody.
I took a picture of it because sometimes you bring something like, no, that's not. No, I got evidence. It said it. Now it changed. Whatever. I'm going to go trade the market and focus on what I do. By the way, modern economics, one simple principle is specialization. Do what you're good at, build the skills that you need to work on. YouTube can figure itself out, and I'm going to have to just let it go water off the duck's
all
back.
I know, Tim, is I got a headset and I'm ready to talk. I don't know how it all works.
Other than that, line me up. Yeah.
I know how to plug in the USB, put on the headset, and I know how to click some buttons. That's about the extent I know as a trader.
Yeah, it's like Ray Allen in the corner. Just give me the ball, I'll knock it down. All right.
Yeah.
How many? In fact, that shot from the finals is one of the most impressive things in sports I ever have seen in my life. You know what I'm talking about, right?
I remember LeBron James pulling up about 5 feet from the 3-point line, clanking something off the back of the rim. It goes up in the air. Chris Bosh tips it out to the right side corner. Ray Allen is about 1 foot in front of the 3-point line. Ray Allen, within 1 second of the shot clock, down 3 in the game 6 of the finals against San Antonio, takes a step back without looking. 2 steps, toes literally within an inch behind the 3-point line. Without even thinking, he raises up and dagger 3. It was one of the most epic shots I've ever seen.
No, that wasn't the one I was talking about.
Yeah.
Oh, all right. Let's rock and roll.
I do really like the detailed. Like, I feel like I was there. I was reliving this.
That was pretty good, man. Yeah, I enjoyed that too. That was really good.
If you have not watched that in a few years, go watch that. I'm sure it's on YouTube. It was one of the greatest shots in NBA history.
By the way, we made fun of Cody enough about not having a fun story to start the show. And so in our prep, he put in puppies and rainbows. And so puppies and rainbows today, Matt.
Puppies and rainbows. And Cody's like, yeah, I just thought you guys needed something nice and, cute and whatnot. And I'm like, oh no, puppies trigger me right now.
It's Delta Tuesday. First thing we always do is the market skyline, break down the S&P on a charting perspective, Matt. We've said 2,600, 2,700 is the range that we're stuck in. Out of all the different indexes, this is actually the one that's flattest today, a little doji. Compression right now, Matt. You've got Apple earnings tonight. You got the Fed tomorrow. Everything that we've been building up for this week is still in front of us. Doesn't surprise me that we're on a doji here today. What's your read?
It does not surprise me in any capacity. The entire market's waiting here, Tim. The same way that you and I are waiting. We're waiting for 3 events this week that could trigger the market breaking out of the range that it's in over the course of the last week. I talked about it yesterday, and those 3 events are very simple. You have Apple tonight. Apple tonight is a very, very important earnings report. It's one of the biggest companies in the world, and with their self-proclaimed downgrade from 2 weeks ago, it's going to be very, very fascinating to see what Apple reports here tonight. We'll break down Apple's earnings later in the halftime report, but you have the Fed tomorrow, obviously, not with the announcement. Everybody knows they're not going to raise rates. Again, what do they talk about in their language? Is the patience language in there? And what does Jay Powell talk about in the Q&A portion of the press conference after the announcement is made regarding the balance sheet? So those 2 things certainly can break this market out of the range. And then you have the unemployment report on Friday.
Yeah, there's a lot in front of us. Probably the first thing is the Apple earnings tonight, which we will thoroughly go through here in just a few minutes. As I'm watching for a breakout one way or the other, it's becoming a stock picker's market. When I was in the lounge today with a lot of the pro members over at Tackle Trading, we were going through some process. We were talking as a team, and the discussion of heat maps came up. And one of the valuable things about a heat map is it can show you the differences in the market. For example, industrials are really strong today, but technology's down, So you're seeing some sectors. In fact, you can see the split here visually, Matt. Tech is down, Amazon's down, but materials, healthcare, industrials, those hard asset type classes and utilities, they're all up today. So you got to split.
Well, you do have a split, and it just reminds you about energy. Energy coming, and we're coming into the end of January, beginning of February. I just want to remind everybody that seasonality with energy. Energy is the best performing sector if you combine February and March, and we're starting to see that coming into February. So keep an eye on that energy sector. If it can break out to that 55 with oil, and if we can see energy get above resistance, you could make a good run in energy.
Yeah, I do like the potential for a breakout there. And healthcare was one of the better performers last year. Many, many different weekends, we had that rated at the top. It'd be interesting and nice to see a comeback. There's a lot of those stocks in that sector that I see as fundamentally strong. Lilly is one of them, for example, that we've been targeting at times. Let's keep working through the charts on the S&P, though, Matt. Come back to that for just a second. As you see the split happening, I'm watching 26 and 2700. On the intraday, we do have some support holding, and you've got curling moving averages, but you've got long-term trends coming down. How do these trends usually win themselves out in the history of markets? Short-term or long-term trend?
This is short-term trend. Okay, so let's just focus immediately on the short-term trend. What you're seeing in the market right now is a technical formation called the high base. That is what we're seeing. We're seeing a price appreciation that is overextended, and now you're seeing it consolidate. And remember, we've talked about this in the past. When you get overextended in the short term, you get well above that 20-day moving average. And then as happens, and this happened with gold too, and we'll look at gold in comparison. But in terms of that 20-day moving average, that catches up to that high base, and then you see that breakout. So what you're seeing right here is you're seeing that 20-day moving average slowly creep itself up there into that 2600 range. Watch that catch up to it, and then typically you do see a breakout here. So now, obviously, you don't do anything until you have confirmation. But in my estimation, based on the probabilities, I would say the probability is a breakout is more likely, but I wouldn't put it in the 60, 65%. I'm still in the 52, 48%. I'm not going to do anything until I see it actually break out. But if you'll remember what we said on gold, as gold got overextended to the upside and this moving average was slowly creeping up, what do we say? A lot of times that 20-day moving average catches up to the price, and then you see that breakout. And what a beautiful breakout 2 days ago, last Friday on gold, getting up above that 1300 handle and now currently sitting at 1314. So looking at the S&P 500, you see a fairly similar technical pattern as it's a price appreciation. It gets well above those moving averages, gets stuck in that range between 2600 and 2700. That 20-day moving average is slowly creeping up to it. So that is a positive sign for the marketplace. Now, obviously, you have a lot of variables this week with Apple's earnings, Facebook's earnings tomorrow, the Fed tomorrow, unemployment rate coming in on Friday, as well as manufacturing data. So there are variables that could drive this one way or the other. But keep an eye on that 2700 handle. If you're looking at it in an aggressive way, 2675 to 2680. But keep an eye on that 20-day moving average slowly creeping up, Tim.
There's a lot of action going on in the market. One of the better performers from our Tackle 25 list today is Nucor, and you're talking gold and materials, maybe think of the steel sector as well. Nucor had earnings. They gapped out. They're showing a little bit of strength, up 3.5% or so. When you have a post-earnings gap on a company that you already like and that you've targeted, and now we're showing us clear air, but you got all kinds of resistance. What are you looking for it to settle in here, Matt? Would you give it a chance to gap fill back, or how would you approach a situation like this?
Well, technically speaking, I would call that a runaway gap right now. Technically speaking, you have price appreciation moving up, you form a little bit of a base, it breaks out of that, and then you start running away from the price action. But typically speaking, I like to give it a few days, to be honest with you. I like to see how the stock's going to perform after that gap. If I see a little bit of a base and it starts forming a high base, I look for the breakout there. If I see it start coming back down and closing into that 58 handle, it's a retest of that old resistance level, which would be a bullish retracement. So the type of trader I am, I like to give it a few days to see how the market's going to respond post earnings and give me a technical setup that I can actually determine the probability on. So for me, I'm going to wait till this either high bases or forms a retracement.
Mm-hmm.
But
Yeah.
as an investor looking at Nucor is a fundamentally strong company. It's a good company. It's a Tackle 25 company. It's a great covered call company, and you have a breakout post earnings. And Tim, they not only broke out, they broke out on earnings per share of 2.07 per share on revenues of 6.3 billion. That was supposed to be 193 on 6.3. So you had a positive response on earnings per share. You came in at revenue. That's both positive for Nucor.
Stay with the Tackle 25 candidates for a minute here and give me Newmont Mining, because in that same space, same sector, same thought process, Newmont is also showing me a little bit of an up move today. They were down on that acquisition news earlier in the month, Matt. They've recovered quite a bit. Now they're above moving averages. Company that we firmly like, and especially in sectors like materials and energy, any kind of strength here is more confirmation. Maybe this trend is getting back to what it was in. I know you got pivots above you. I know you got concerns.
Yeah, you're not making any trade here, but an investment is different. I mean, I'll just go back to what Coach Mark said a week and a half ago when we had him on the halftime report, and the market was coming down, 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 down. And he said it, and I agreed with it, that he felt this was a tremendous overreaction to the merger with Goldcore, and he was going to use it as an opportunity to buy a good company at a lower price. Now, technically speaking, I would be patient in that. Technically speaking, you are coming into a bearish retracement here. You're slowing down on that bearish retracement. So if you're looking at this point, I would much rather, even as an investor, I would much rather either sell a put option down here at $30 where you have the historical support level, or I'd wait for the breakout at $35.
Mm-hmm. Yeah, definitely. There's a lot of action going on in the market today, up and down. To some of the top five, and by the way, Pacific Gas, PCG, just give me a quick look at it. It is the number one gainer on the S&P 500 today, up 13%.
On a day they filed Chapter 11 bankruptcy.
I got to just remind everybody what we've said over and over and over again. You know, obviously, you've got your own decision making. Yeah. Disciplined traders are not going to touch this thing. They're just not. I don't think it's. I just don't see any opportunity here, one way or the other.
I got to ask you guys, because I'm actually not really sure exactly. They filed for Chapter 11 bankruptcy protection.
Yeah.
What's the difference?
They're filing Chapter 11 bankruptcy is what they're doing. It was expected. It's been expected for the last few weeks.
Why did the headline say protection then?
They're filing Chapter 11 bankruptcy.
Okay.
Yeah, I mean that's what's going to happen. They're getting delisted from the S&P 500. Again, could PCG come out of this? Absolutely, but I don't think PCG is going to come out of this unless they get some type of public support.
Yeah, they got to have clarity on quite a few different issues. And by the way, stuff like that, when you're dealing with bankruptcy and Chapter 11 and whether or not they're going to get sued here, there, or the other thing, I mean, you've got a precipitous downtrend where there's fundamentals at risk here. And if it does come out of it, sure, maybe that's a different discussion. But we're a long ways. When a company is moving like natural gas did in the commodity market, 10, 12, 15% per day, I mean, there's obviously something dysfunctional about the price right there.
Tim, we're talking about a utility company. We're not talking about a pot stock here.
No, we are not.
We're talking about a utility company that's driving up and down. I mean, the ATR on this, what's the ATR on PCG right now?
Oh, it's got to be moving crazy. Let me look here.
Yeah, that.
I go back to a daily chart.
The ATR on this bad boy is moving about $2.83. Tim, that's moving over 20% a day right now.
Mm-hmm.
I mean, as an investor, you're not going to touch that. As a trader, yeah, you got opportunity there on a day trading perspective. But I don't even see swing trading. It's a swing trading. I mean, my God, I'm talking about swing trading a utility stock here. But it's crazy. It's crazy. But if you are swing trading, Tim, a trigger above 15 makes sense. But as an investor, you're not going to touch this stock when it's moving this fast.
Yeah.
Let us slow down. Let's let the smoke kind of clear here, and then let's make some decisions then. But no, as an investor, I want to touch this right now.
You know, some of the losers here today on the S&P: Harley Davidson, Allergen, Nvidia, Signet Jewelers, and AMD. Let's move on to Hog and look at one of the stocks that are down today, down 7.8%. And so much, you know, over and over and over again, it's going to be earnings. Earnings are going to gap it out. Earnings are going to gap it down. Hog had disappointing earnings report over the evening, Matt. And
really
they did down.
Actually. Really disappointing. Just to give you the actual numbers, reported 17 cents per share on revenue of 1.1 billion. The consensus earning estimate was 33 cents a share on revenue of 1.1 billion. So they came in at 1.1 billion where they were expected to, but they got destroyed on earnings per share. Obviously, understand the gap down here.
Yeah. And I love the company. I love the brand. One of the most successful brands.
I'm very concerned about it. I agree. And I love the company too. But I'm concerned about Hog long term.
Sure. Yeah. And support there in play. If you break below that, you don't have a lot of support underneath there, Matt. Obviously, moving bearish, gap down. That categorization of a gap most likely will fill back more often than not, but be aware of where those triggers are. Gap trading in play there. NVIDIA down 4.5%. NVDA. Chip makers have just taken it on the chin here recently.
NVIDIA is down 50% in the last 4 months, Steve.
This is why, people talk. I even asked you the question, do you buy there on a gap into support yesterday? And you're like, no way. I mean, too much pressure, too much weakness.
You might as well ask me the same question on a hog. It's the same thing. And I'd
same
say
kind of pattern. Yeah. And continuing to sell. Give me SIG down 4%.
Think about it. Would you rather? I'm going to give you a would you rather. And you got to do it blindly. Would you rather buy NVIDIA after the gap down on a reduction in fourth quarter guidance, or would you rather buy Nucor on the gap up on strong earnings?
I'd rather buy in strength, Nucor. I mean, trade with momentum, trade with strength.
You buy into strength. Yeah. You don't touch weakness. You buy into strength. You let weakness settle. You let weakness settle down. You let the volatility settle down. You let it form a reversal pattern. And then when it breaks out, that's when you buy it. And if you just need an example, here's Toll Brothers. You don't buy it on the down. You don't buy, like, take a look here. You don't buy it on the gap down. You buy it on the breakout, or you buy it on the retracement. That's when you get into it. So when you're looking at a company like NVIDIA, massive company in the chip makers, and you're saying, okay, here's NVIDIA, it's slowing down, it gapped down. Well, let it shake out first. Let it shake out first. The trade is very easy here. The trade is very, very easy here. It's a breakout of 160.
For
you let
sure.
it do, at this point, you let it do whatever it wants to do. You don't chase the dragon. Let it do whatever it wants to do. You're the patient trader, and you wait for the breakout.
I like it. Let's move on to the NASDAQ. Talk tech here for just a minute. Obviously, tech was
not all chip makers have been weak. NVIDIA is weak. Intel's been weak. But as a reminder, AMD still showing a little bit of reversal. Think about that trigger above 22 and a half. You also have Applied Materials, which has shown tremendous strength over the course of the last month, Tim. So again, I wouldn't buy Applied Materials right now because it's overextended, but a retracement. So not all the chip makers are weak. You're still seeing potential breakout candidates in AMD, and you're seeing a reversal that's already confirmed in Applied Materials.
Yeah, and the AMD one, they do have earnings tonight, Matt. They're a very, very big mover on earnings. I don't even.
They're fun. They're fun on earnings.
They're wild.
It's such an easy call for me with AMD on earnings. It's an inverted butterfly.
And one of the great things about AMD on earnings is the direction that they take can end up creating a trend. I mean, the gap that they had what was it, July, ended up sparking a trend to the upside that was parabolic.
Well, look at this one. Gap up, run. Gap up, run. It was this one in the third quarter of last year that it was a little concerning with the gap down. But typically AMD will gap and run one way or the other.
Mm-hmm. Yeah.
You gap up above 22 and a half on AMD tomorrow. Let's make sure that we review AMD tomorrow.
For sure. Cody put that in the prep. One interesting thing about tech right now and the market in general, Matt, it's not very common. I see this in the internals. On the Dow, we've got 20 going up, 10 going down. On the NASDAQ, we've got 80 going down, 20 going up. So it's a complete flip-flop. Weakness in tech for a lot of the reasons we've talked about, and strength in blue chips just because of certain corporate names holding up and doing better. Dow showing strength, NASDAQ showing relative weakness. What does that tell you?
Blue chips. I mean, that every time. If the Dow's shown strength, if the Dow's shown relative strength against the NASDAQ, it's the market just saying, listen, let's let things kind of, work its way out. Give us some blue chips right now.
For sure.
Blue chips are a little safer than the aggressive NASDAQ.
Sure. Yeah, I agree with that. On the Dow, top gainer today is Caterpillar, recovering 3% up, 3M, 2.5%, Pfizer, United Tech, and Johnson & Johnson. It's the industrials and the healthcare, Matt, that are really showing a lot of the strength here. Weakness, again, your Verizon, your Microsoft, Visa, Intel, McDonald's, complete sector rotation and split in the Dow and the broad markets today.
Keep an eye on 3M, though. It's an interesting thing that's happening with 3M. Obviously, just reported fourth quarter earnings. Earnings came in at $2.31 per share on revenue is $7.9 billion. The estimate was $2.7 per share on $7.9 billion. It's interesting how all these companies come in right in line with their revenue projections, but an obvious beat on earnings per share. Market is responding favorably. Now, in looking at 3M, Tim, you do have a trigger, and the trigger on this one's really easy. Look at this one. Let's drop that into a 30-minute chart. Look at this trigger. Markets love whole numbers, don't they? Look at the response. Look at the head right there at $200. Now, drop it down onto a daily chart. You do have reversal formations happening. If you give me a close above 200, that's a swing trade. Absolutely.
Yeah, I agree 100%. You know, one thing about the Dow that does have to be noted is Boeing does have earnings tonight, or actually tomorrow before the bell. You have Apple earnings after the bell, McDonald's earnings before the bell. You got to get the Microsoft earnings after the bell tomorrow. You still got a lot of major names. Yep, a lot of major names that still have to play themselves out.
Well, think about the companies you just said: Apple, Facebook, Verizon, McDonald's, Boeing. You have massive major companies from different industries, different sectors, and different indexes.
For sure.
And then to follow that up, you have the central bank at noon tomorrow.
I think the next 2 days.
The next 24 hours is going to be very important for this marketplace. Very important for this market.
It's the calm before the storm, and we got a doji on the S&P. We got a little bit of weakness in the NASDAQ, but less than 1%. I mean, the NASDAQ's only down 0.7.
Think about it. Let's say every trade right now is sitting here, and they're wondering. They're sitting here in front of the market, just like we are, and they're like, "Ooh, should I do anything in front of Apple? Probably not. Should I do anything in front of Boeing? Probably not. But should I do anything before the Fed? Probably not." I think the next 24 hours is going to be very, very important for this market if it's going to sustain the growth that it's had in the first part of this year.
Agreed, 100%. You know, so much movement back and forth across different markets. EA is down 3.5% on the NASDAQ. Those gaming stocks have been volatile.
Those gaming stocks, every one of those gaming stocks right now, they're some of the worst producing today. All of those gaming stocks. Yeah,
they're all down in unison here today. And this one doesn't even have earnings, obviously circling over. It looked like reversal characteristics, and that was. I mean, you had a higher pivot high.
It still does.
Yep.
You got a higher pivot high. You're forming a base. It certainly could retrace back down into the breakout channel right around $85. You're currently at $87.35. You're not going to do anything in front of earnings. But this is the level. If you're looking to buy here on EA, that's the level you're looking at. You're looking at a breakout of 93.5.
Give me a read on the Russell 2000, if you would, and then we're going to move on to currency and commodity markets, continue through our daily routine. And by the way, before Matt analyzes the Russell, welcome out to our halftime report here, guys. Always great to have you on a daily basis.
Tackle, baby.
Yeah, give me something in the chat. Let's get some love out there. By the way, Marie, who is a fantastic member of Team Tackle, very, very loyal, and we love Marie, Matt. She did the lounge today, and she was the presenter, and she was the one talking about her process. Awesome. And Marie, you did a great job. You know, I was real proud of
you. And Tim, we just had the release of episode 306 of the podcast, and another hashtag Team Tackle, awesome pro member, Maria Diamond, came on and was on the podcast. So for all of Tackle Trading, let's go support our own. Listen to Maria's journey. I felt like it was a wonderful interview, Tim.
Yeah, I enjoyed the whole thing.
Especially the second half of that interview. I've listened to it about 3 times now. And I love Maria's story. I just love her journey to where she was coming into this country, not even understanding English at the time, and then learning how to trade, learning how to speak the language of English, and then learning how to trade at the same. I mean, just a fascinating journey.
You know, the thing about that interview that really has me still kind of swirling is how big Russia is.
Oh man, you guys, when you're listening to the podcast, I had to cut out a little bit of Tim's, shock and awe about how large Russia was. I'm like, Tim, didn't you study geography?
I did. I had a thing, I'm not going to get into it. It's massive. It is in Europe. It is in Asia. You could be from the left, the right. You could be all over the dang planet and you could still be in Russia. Russia is the biggest. It feels like the biggest place in the world now. Yeah, it feels like that. My head is still spinning. I don't know. Maybe we'll have to get a list of Russian companies to trade now, Matt. I'm all Russia in right now. It is what.
So you're making an argument that we want to buy the Russian market over the U.S. market?
Let me make that argument. No, I'm not going to do that.
I'm going to make that argument.
Well, RTY here. We're stuck in a range here, Matt. I had a question today, and I asked you this yesterday. I'm going to ask it again. Somebody asked me, Tim, if I have a 1,600 bear call spread and I have to hedge this. Do I hedge it at 1490 or 1500? My first answer was you have to make that decision. But how would you break that down technically? Because the one's a round number, the other one's the actual pivot.
It's the same conversation you have with the S&P. If you break out of 2680, is that a confirmed breakout, or do you wait till it breaks out of 2700? It's just a matter of a personal decision whether or not you want to be more aggressive or a little bit more conservative on something like a condor, Tim. I want to hedge that on a break of an intraday resistance level. That's a 2-month massive range type system. I would only hedge it if I had a 1600 call. I would only hedge that on a break of 1500.
Yeah, 1500 probably. And I don't even know if I would hedge.
I don't even know if I'd do that then.
You could even map out a plan to hedge it at 1550. But what I really loved about what the trader did, Matt,
are you kidding me? You can make a plan to hedge it at 1 ATR away from 1600.
Sure. And here's the thing about trading any system. You have to map out those plans in advance. I don't care if you're just directionally trading a stock, if you're day trading Forex, you got to know where you're going to make decisions.
And I think one of the more difficult things with managing the cash flow condor system right now is we have such a short-term memory to what happened in October and what happened in December, right? And so I think we're all, and I mean all of us, are going to be a little quick on the trigger to hedge that system, just because we're so fresh to the volatility.
Yeah, it was a whipsaw. I mean, the last 4 months in neutral trading has been pretty brutal, quite frankly. And so hedging and adjusting and risk control, I understand why traders are a little gun shy right now and trying to control that.
Absolutely.
Not a bad instinct at all.
Listen, I said everybody. I meant us.
Yeah.
I meant even veteran traders are going to be a little quick on the trigger to hedge, and that's okay. That's okay. It's better to be protective right now in this volatile condition of uncertainty. So I understand that, but I still believe that every trader's a little too quick to hedge usually.
Yeah. Move on to the dollar, if you would. Currency markets are a nothing burger until the Fed tomorrow, Matt. There's nothing really going on. You got a little green candle on the USD futures contract in the index. Euro is showing that same red candle, but I'm not seeing anything significant across currency pairs. I don't expect it to be so until we get resolution or some kind of clarity from the Fed tomorrow and how the market reacts to that. Same posture. Is that where you're at?
I'm not doing anything until the Fed.
Yeah, me too. Energy markets, crude oil is up 3%. And you can see this actually, and this is one of the reasons why a lot of those stocks were also running here. Break at 55 would be significant, but until then, nothing really here. Are you actually, I mean, here's the thing. I've kept saying that, and I have that opinion, but I'm looking at this here, and you've got a curling moving average in strength. 55 is the conservative trigger confirmation. Could you go out and stock pick in the energy sector based on crude strength? And is that correlation strong enough to get interested in something long?
Quite frankly, I think you would go stock pick in the energy sector because of seasonality more than crude right now.
Is that right? Yeah. You know, looking across all the other energies, Brent up 2.5%, gasoline up 3.5%, heating oil, they all tend to move together. Natural gas, though, also down today.
Can I say this one thing on crude? You have something interesting setting up coming into February. You have a snapback rally in crude that is now basing over the last 3 weeks. You have a rising moving average coming into that base pattern, right? You have seasonality where energy is the number one sector in the market in February and March. Okay, combine those two months. You couple a breakout of 55 with seasonality. That's a good opportunity.
Yeah, I agree with that.
Again, I'm waiting for crude to break out before I rush in because seasonality takes into account, 20 years, right? But you do have that coupled together. Just keep an eye on it. That's it.
Yeah. There's a bunch of stocks I want to run through, and as part of our analysis, Matt, as we break things down, go into natural gas real quick before we do, though, and then gold. Let's finish our daily routine. One stock I want to talk about here in a minute is Square. It's down 9%, and I love the company. It got downgraded. It happens. We'll get into it here in a second. Nat gas, untradeable still, in my opinion. I know a lot of people still sell naked puts on it. I understand you've got your systems out there, guys, but the volatility it's too inconsistent for me, especially as it's jumping around and I'm not seeing any kind of predictability. For me, untradeable.
To me as well, right? And I do like naked puts on natural gas, but I have not done a naked put on natural gas in months and months, Steve.
It'll come back.
It will come back. The naked put in natural gas is great, but I would highly, highly, highly recommend bull puts instead of naked puts right now on all commodities.
Yeah. Yeah, I'm with you. Control the risk. I mean, set a limited risk. If you're a theta trader, there's a different way that you can approach that. I love the naked put strategy, especially when you're willing to take on ownership of an ETF or stock or whatever it might be. Just pick your spots, and you got to play your system. And if you can spread it, that will control that risk quite a bit. You know, commodity markets, there's not a lot going on here. Move on to gold here for a second, though. Let's talk about the metals. Now, the Fed is going to impact this. We have been talking about this gold breakout for quite some time. This might be another one of the move of the week kind of situations, Matt. We broke, we held, we're running. It's great, it's strong. Where do you target here if you're long?
Where do you target if you're long? You target 340 by 360.
Yeah.
I mean, you're up above that 1300 level. You're up above the 1308 level. You're really starting to target. Think about 1340 by 1360.
And we can come back to gold, but give me a quick peek at silver while we're talking about metals here. And I want to ask the halftime crew: are you long either silver or gold, and which one do you prefer, silver or gold? You know, from the bullish perspective, gold already triggered and ran. Silver is now just triggering now. They are ever so subtly different chart patterns, but very important differences, Matt. Gold, the break above 1300 puts it above old support points. Silver, if we break here, we have another layer that we've got to fight into. Break these charts down, if you would.
Well, gold's broken out of its high base. It's running. Silver's breaking out of a bullish retracement pattern. This is the trigger here on the retracement. It slows down. It triggers back up. That's the trigger there. If you didn't get in on that trigger, then you're sitting here at resistance. I want to touch it sitting at resistance. I'd wait for it to break 16.
Mm-hmm. Yeah, I got answers coming in here. Nick says gold, both for Justin. Bunch of people gold, long GLD.
I'm not long silver. I prefer GLD right now.
Yeah, I like silver
I like them
on the
both.
physical.
I like them both.
And this is actually a new trigger here, Matt. Above 16 would even be further confirmation, but the patterns are different. I think that what you pointed out is very, very important. They are different patterns.
And very quickly, Percy, where would you target for GLD if I'm rolling up a short call and a poor man's covered call? I would target, you're at a target on GLD. Absolutely, you're at a target on GLD at 124. But when you're looking at GLD, you really kind of got to look at /GC better, right? So if you're looking at perhaps going up into that 1340 mark, I wouldn't target anything above 126.
Mm-hmm. Yeah, I'm with you. Take a look at
and the second target would be easily 128.
128 on GLD. Yeah. Move on to Square, if you would. Square has been one of my favorite companies to target recently. In fact, I did, buy that and go long. And the reality is you had a downgrade from an analyst here today, Matt, completely one of those deals, downgrading on guidance or whether it's an analyst coming in. This is stuff that you can't really predict. It's one of the reasons why money management is so important. But even at gapping down 10% here today, is that now trend violation? Does it put it back into a neutral position? I still see bullishness myself.
It's bullish and it's forming a bullish retracement. Sometimes those downgrades, Tim, they just come back down into support a little quicker and they become a buying opportunity. So I'm not in anything on Square, but if I was looking to get in something on Square, I'm taking today as a positive reaction, to be perfectly honest with you, as it's coming back down into a rising moving average. It never catch the falling knife, let it slow down first. But at the end of the day, I'm looking at that as a potential trigger if we get some slowing down, and especially with that rising 20-day moving average.
Mm-hmm. XRX Xerox had earnings and reacted to it, showing me some strength. A lot of earnings, Matt, just throughout the market. All the news that's flashing on my signals and my watch list is earnings, downgrade guidance, this and that, until we get clarity out of these companies. And really, this week will be the tipping point. After we get past this week, there's always going to be more companies with earnings reports, but we're going to get through the bulk of it and the Fed meeting. I think you'll get clarity by early next week on where the market's going.
Earnings season is always more volatile than a normal environment, but different earnings seasons have different levels of importance. With what the market did in December, right? A historical down movement in December, the worst December since 1931, since the thralls of the Great Depression. This earnings season is vitally important. It's more important than typical earnings season, especially coming out of the fantastic earnings growth we had in the especially the second quarter of last year and the third quarter. So obviously our expectations are not as high as they were in the middle of last year, but given what happened in December and really kind of October through December, it's just more important this time. It doesn't mean next earnings season is going to be as crazy and hectic as this one and the one after that. Typical earnings season, we come and we just trade earnings and it goes and everybody's happy and you don't see a massive market movement one way or the other. It's just taken a heightened sense this time because of what happened in the recent history.
Yeah, I'm with you. Let's take a look. Now, there's several things I want to get through Apple and break down the earnings expectation. I do want to do that before the end of the thing, but give me FXI before we do that. One of the big stories overnight, Matt, and I want to get your take on this, was China's Huawei being indicted, and also U.S. putting charges on them. I think that they announced criminal charges on Huawei Technologies, escalating that thing that started in December. I saw the headline. Yeah, obviously, it feels complex to me. I'm not sure how to read this, by the way.
It feels like a gut punch before a two-day trade talk with China and the U.S. It feels like the U.S. just wanted to put that bargaining chip on the table officially.
I think so. Meng Wanzhou, and I may or may not be saying her name.
She's not going to see jail time. Let's just put it out there.
Is she going to prison?
She's not going to prison.
What is the actual charge here, Cody? I know that you dug into this quite a bit.
Violating U.S. sanctions.
Is this just politics, Matt?
Yeah.
Yeah, of course it is.
Well, the Chinese market's not really reacting to it.
Because everybody knew this was going to happen. So it's just a bargaining chip. The U.S. is going to use it as part of the negotiations. Well, if you give us this, we'll drop charges and blah, 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 blah. I'll tell you, if I was an American CEO, I would have a hard time being convinced that if I needed to go to Shanghai right now, I would not go to Shanghai right now.
For sure. I think that that would be opening the door to something you may or may not want right there. Let's do Apple earnings here next. Then right before the end, let's do a quick Fed preview and talk a little bit about that Brexit stuff that came out, but we'll do that right before the end of the show. The biggest news of the day by the end of the day is going to be whatever Apple does tonight, guys. And earnings dates and previews and whatever it is that you're looking at, there are certain things that you can measure from an expected gap perspective, from an earnings perspective, different things. Matt, when you're approaching a big company like Apple and you're trying to understand what the expectation is and the gap, how do you break it down?
I think absolutely everybody would celebrate a breakout of 160. And when I mean everybody, I mean everybody, because hardly nobody shorts Apple. I think everybody is sitting, waiting to see if they're going to beat. I fully expect them to beat on revenue, and I do expect them to beat on earnings per share. In fact, if you're looking at Facebook and Apple, I expect both of them to beat tonight and tomorrow. Now, I think all the market expects that, so let's see how the market responds to it. But I think everybody would celebrate a breakout of 160, Tim. You look at this on that weekly chart. Look at that tremendous drop. Look at the slowdown. Look at that 160 handle right there. Old support, old resistance, consolidation at 160. You break out of 160, you have no clear resistance until about 180. And then after 180, it's a race to 200. After 200, it's a race back up to the top. So I'm waiting. I'm waiting just like everybody else. Now, I don't have a trade on Apple coming into earnings. If you break down out of 140, I don't short Apple, but if you break down out of 140, there's nothing under the bottom there. There's nothing under the bottom. So I would not buy a breakdown. I'll tell you that. Buy into strength.
Yeah. It's got an $8 MMM move, Matt. That projection is pretty in line with what historical norms are. I've been watching Apple earnings for a very long time. Obviously, one of the major components, you're going to watch it. And they usually gap 4 or 5% at the most,
They're always expected 4 to 5% on the market maker move.
They're pretty consistent. That MMM projection is a think or swim tool. I'm not sure where else you can get it besides manually calculating it.
Well, that's Think or Swim will sit there and tell you how it's a combination of the volatility on the short-term month versus the second-term month, and we have this advanced algorithm that really kind of puts it all together. And then if you go out and manually project the average gap range out of the last 4 gaps, miraculously, it's just the average gap range. That's all the market maker move is, Tim. And so when you're looking at that market maker move, just realize that is an average gap expectation. And so when you're looking to trade earnings strategies on, Adam, we'll talk about AMD here in a second, but when you're looking to trade earnings strategies, it's not about if the market goes up or down. It's if the market if you expect the market to go more than the market maker move or less than the market maker move. And the reason that's important is because the type of strategies that we do around earnings, especially the day of earnings, are all about selling options because of volatility being extremely high. And then as earnings announces, volatility comes down and the value of options go down. So the question is, do you want to do an inverted butterfly or do you want to do a short strangle? I mean, that's kind of the question. Adam put that question there in the chat because that's always the question. Do you expect the market to move more than the gap range? Well, if you expect the market to move more than the gap range, that's an inverted butterfly. Now, whether you do it or not, you have to run the numbers, right? But if you expect the market to move more than the gap range, you're looking at inverted butterflies. If you expect the market to move less than the market does, then that's obviously a short strangle or an iron condor of some short. So it's really just based on that expectation. But Apple's so consistent on its gap range, Tim. It's so consistent. In fact, I would bear to say that Apple might be the most consistent company in the gap range in the marketplace. It literally loves 4 to 5%.
It definitely does.
I just don't think you have an edge on. My whole point is, because the entire market knows Apple so well, I don't think as a trader you have a proper edge on the gap range here.
Yeah, the current 7-day implied volatility is 5%. You know, the expected gap is what, 5.5%. If you look at their historical gapping, I mean, this is basically what they do. It's chalk right now, Matt. The line is a very fair line. A gap out.
Gap 5.5% last time.
Yeah.
Over here, it went from 190 to about 200. It literally gapped 5% last time. You look at this gap here, 168 to about 175, 8 points. It literally gapped 5% that time. So, I mean, like I said, you know, the market maker move, it's not always accurate because sometimes you get, you know, 2 gaps that go 7, 8, 9, 10%, and you get 1 gap that goes 1, 2%. And so it averages to about 4 to 5, but you might have an edge there, right? But when you're looking at Apple, and it's literally 4 to 5% every time, I just don't feel like you have a proper edge. And when you're doing any trading, when we talk about the word edge, we're really referring to probability. And when you sit there and you have a stock that is so consistent on its gap range, I don't think you have a proper edge. Now, could you convince me by saying, well, Matt, this time's different from last time, that, you know, Apple's down, you know, 40% over the course of the last 3-4 months. And, you know, this is a major move in the market and the entire market expects it. Absolutely. 100%. You could convince me of that, but I still believe the better trade on Apple is a post-gap read of what the price is doing above 160, because if it gaps down, I'm not looking to do anything.
Yeah. Yeah, I would agree with a lot of that. You know, the earnings whisper, Matt, is going to come in at 4.18. I know the consensus was 4.17. They have a revenue projection of 84 billion. I don't know exactly what the analysts in the market would be looking for, but I'm sure that if they beat top line and bottom line, the company's going to respond well. It's not always a guarantee.
Apple lowered its guidance so that they can beat it.
I agree with that.
I think they know they're going to beat it.
That's where my instinct is. Obviously, we've got an over-under line here. If you add that 8 points to 156, that puts you at 164, right on that falling 50-day moving average. An $8 gap down at 148 would be right back in the middle of the range. If you're long stock here, do you call her going into the earnings?
On Apple, I would call her.
It feels like there is extra risk than what has always been there. It's a tough one to call. I think the line's a fair line there at 6, or what is it, 5.5%, 6%, and $8 MMM.
It's a good line.
I think it's a good line.
It's like your what's the Patriots line right now on the NFL game?
I think it went well. They opened up and they were dogs, and then the money moved on to the Patriots because they've been to like 25 Super Bowls. So why wouldn't it?
I mean, I think like 80% of all the money is going on the Patriots right now. When you're a gambler and you're looking at the line, you're not betting on the teams, Tim. You're not betting on the patch. As a professional gambler, as a novice, every now and then you just bet on your favorite team, right? But as a professional gambler, they're not playing the teams. They're not playing the Bears versus the Saints or they're not playing that. They're playing the line. That's what they're playing. They're playing the line versus the historical averages. That's what we do as traders. We don't play the name. We play the line. The line, and so when the market expects 4 to 5%, and Apple has a historical understanding of 4 or 5%, there's no edge there. If the Pats on average, over the last 20 years beat XYZ team by 3 points, and the line's 3 points, you don't have an edge there.
Yep. Give me a quick look. We're going to rapid fire through a bunch of stocks. Pfizer, tackle 25 component up 2%. They beat their full year guidance. They're coming out with some better numbers here. It's not in a great trend technically right here, Matt, but the earnings report was strong, and you got to like the green candle.
Oh, I was reading Noah's, I've got a Debicon and a short strangle. See, that's a professional trader doing something different. That's massively hedged. He got some massive management tools.
Yep. Delta Airlines.
I think that's going to be way interesting to watch Noah manage those trades tomorrow. So definitely get in the Traders Lounge, everybody.
For sure. Well, I mean, that's a doubled up trade where you've got short volatility, long volatility. That's obviously not for a beginner, but that would be really cool to watch Noah and talk about how he's adjusting and managing it. Give me a quick peek at Delta Airlines. It's a company that I really like. Tackle 25 component, Matt. They're starting to show me some reversal characteristics on the bottom. They hit on my top 5 on the Tackle 25 list today. Anything there technically until we break?
No, it's just a matter of where do you consider a confirmation on a reversal. I do not consider a confirmation on a reversal to break that. I think you got to get back up above 50.
I agree. This whole market just feels like we're stuck waiting for the Fed and these earnings to come through. I know there's a bunch of different setups out there. On the reports, one stock that I really liked was Roku. Show me that it wanted to break out here today, Matt, and showing a little bit of resolve, but then came right back into the range and no confirmation yet.
That's fine. Just be patient. Wait for it to break.
Yeah.
Now, remember, confirmation has to close above resistance. So a close above 45 would absolutely be a confirmation.
Tackle 25, JP Morgan, Texas Instruments, PayPal, OKE, all of them flashed on Cody's screener. He put them into prep. OKE real quick.
OKE is very interesting here because if you do close, that is absolutely confirmation.
PayPal. I like this company, but you got earnings coming up here. You can't touch it. And then your favorite dude on the planet, JP Morgan, Jamie Dimon.
You're
getting close. It's got clear air if you break.
Now, I make fun of Jamie Dimon, but I would trade JP Morgan. I would never trade Goldman Sachs.
Yeah.
Unless it's short. I'll short Goldman Sachs.
Probably the only thing that really is going to be on my brain the rest of the day is how we are going to respond to the Fed and prepare for all this kind of stuff, Matt. I saw quite a few headlines coming in. I actually just saw one come across the news wire from Jay Powell about how he's trying to temper expectations from the White House. What are we walking into here? Because it doesn't feel like a rate hike. It feels like the press conference is going to be the big thing. You've got earnings flying around with us. Markets are stuck in a range, and we're all sitting on our hands right now. What do we all need to be prepared for with tomorrow's event and report?
Dovish behavior.
Yeah.
We got to be prepared for dovish behavior. Dovish behavior, how the dollar is going to respond to that, how gold will respond to that, and then obviously the market. So if we do see Jay Powell go dovish in his press conference tomorrow, I fully expect dollar down, gold up, market up.
Yeah, I'm looking at that too. One stock.
That's a variable though. Jay Powell, the last month he's been dubbed, but he's been the most hawkish Fed chief since Greenspan in 98, 99.
He sure has. Yeah.
So definitely. A lot of talk, but his actions have still been hawkish, Tim. A lot of talk, but again, the talk of the Fed reducing balance sheet, just talk. They haven't done it yet. Talk of the Fed reducing it, not reducing interest rate, but halting on interest rates. Yeah, they've talked about it, but nobody expected an interest rate hike on this one since they raised in February. So really, I mean, if you're talking about the Fed raising interest rates, you got to go out to March. So I don't think we're going to get any action. I think we're just going to get more talk. But that talk's very important, how the market's going to respond and how they're going to interpret what Jay Powell says tomorrow. Again, if he goes full dove, dollar down, gold up, market up.
It's going to be a fascinating one. Give me a quick look at Amazon. I'm looking at it, Matt, selling even more into pressure today, 2.5% down, pressing 1,600 and continuing to sell here. This is pre-earnings selling. It's not normal all the time. Usually you'll get things to flatten out, but 1600 is going to be a support point. What earnings on Thursday after the bell? Highlight that red telephone.
I believe it's Thursday after.
It's significant. That's one of the bigger names in the market, obviously, by market cap and size and posture.
Jim, it's going to be a fun next 3 days in the market.
Buckle up, people.
Apple, Facebook, the Fed, Microsoft, Amazon on Thursday, and then unemployment on Friday. It's gonna be fascinating. Stick with us throughout the week, guys. We'll make sure to walk you through all of it.
Yeah, for sure. Coach's show tonight. We'll do a full analysis of what's going on with Apple Computer. We'll know by then, you know, after the bell, the earnings come out. We'll get some price action. We'll break that down. We'll do a full preview of the Federal Reserve meeting. We're going to be back here tomorrow, Matt. Quite frankly, it's kind of a wait and see. You know, I think tomorrow we'll get a lot more clarity, but even during tomorrow's meeting, we'll be waiting for the Fed to come out with that data.
And I'm sure in the coach's show tonight, they're going to do a full breakdown of Apple's earnings.
Yep. All right. Very good, brother. Very good.
Great
Cody,
job,
good job. Matt, good job.
Like and share if you don't mind. And for those of you watching on the video later on today, comment in the comment section. That helps us with our message and SEO getting out there. So thanks, guys. We'll see you tomorrow.